Imagine a solution to save the US government billions. Andrew Hans, CEO of Newmarket Capital, presents a bold strategy. By acquiring $200 billion in Bitcoin, the government could save an estimated $354 billion through innovative bond issuance. Hans' plan introduces a groundbreaking bond structure. The proposal suggests issuing $2 trillion in bonds. Of this, 10%, equating to $200 billion, will be invested directly in Bitcoin. The remaining 90% will fund government operations. Why this works? The bonds would carry a low interest rate of just 1%. This contrasts sharply with the current US 10-year Treasury rate of 4.5%. Such a strategy would yield annual savings of $70 billion on the $2 trillion total. Over 10 years, this adds up to $700 billion in savings. After factoring in the $200 billion Bitcoin investment, the net savings on interest could reach approximately $554 billion. Ultimately, the government could invest $200 billion in Bitcoin and save $354 billion on interest payments. What's in it for bond investors? They would earn an annual return of 4.5% while also sharing in any Bitcoin gains. Both the US government and investors would benefit from Bitcoin appreciation. Hans encourages that gains from these bonds be exempt from taxes, potentially giving American households a financial advantage. This strategy isn't just about cutting costs, it's about tackling the national debt. If Bitcoin maintains its historical growth rate of 37% annually, the government's Bitcoin could exceed $1.7 trillion by 2035 and potentially over $50 trillion by 2045. Such growth could significantly impact the national debt over time. Additionally, this approach aligns with Treasury Secretary Bessent's goal of diversifying debt maturities, reducing refinancing risks. Hans emphasizes that this proposal creates a win-win-win scenario for taxpayers, investors, and policymakers. Furthermore, other financial experts, like Matthew Siegel of Van Eck, support this notion. He proposes a similar model aimed at managing the staggering $14 trillion national debt. His structure suggests investors receive all Bitcoin gains up to 4.5% annually, sharing any excess with the government for incentive. Senator Cynthia Lummis has also advocated for Bitcoin acquisition as a debt reduction strategy. She proposes acquiring 200,000 BTC yearly for 5 years, totaling 1 million BTC. This initiative could potentially reduce the national debt by 50% over the next 2 decades. Remember, this content is for informational purposes only and not financial advice. Always do thorough research before making investment decisions. Join the conversation. Consider the potential of Bitcoin in reshaping government strategies and how it might benefit you. The future of finance could be on the horizon.